So we are approaching the start of a brand new year, 2023. And if you're anything like me, you've already started to think about your goals for 2023 and the things that you want to achieve for next year. Now, if on that list you have that you want to become a homeowner, then I need you to stay tuned to this video. So here's what I need for you to start doing today. So I need for you to get a copy of your credit report from all three bureaus, Equifax, Experian, and TransUnion, and also get a copy of your credit score so that you know where you stand. Now, I don't want you to start paying stuff off immediately, but I want you to just look at it and make sure that everything on it is correct, that there's no misinformation, something on there that isn't yours, and just you make sure that everything is accurate. And you can request these reports directly from the credit bureau themselves, or you can go onto a site like Smart Credit or Credco and get a copy of the report as well as your credit scores all in one spot. Now, Credit Karma is cool, but it doesn't really give you the big picture. So you want to get something that gives you a bigger picture of where you stand with your credit. Next, I want you to take a look at your bank account. Are you saving money? Do you have money saved? Now, most first-time home buyers, they pay 3.5% down payment with an FHA loan. So although there are assistance programs out there that help, we don't want to count on that right away. So it's good to just be safe to have that money in the bank. So for instance, if you are looking to purchase a $200,000 house, 3.5% of that is going to be $7,000. So you want to make sure you have at minimum, $7,000 in the bank, plus you'll have some settlement costs and things like that. So it may be a little more, but you want to make sure that you have that money in the bank. And it can be in the bank, it can be in a 401k, it can be IRA. Just you want to have those assets available that you can use for a down payment. And then I want you to take a look at your income. How much are you bringing home? So this is important because when you go to get your pre-approval, they are going to look at your debt to income ratio. So your debt to income ratio is calculated by adding up all of your debt payments for the month. So your credit cards, your car note, your rent, your mortgage, all of those bills, not including like your utilities and Netflix and those kind of things, but just your major ones that are reported on your credit report. And then you're going to divide that by your monthly income. And so typically banks like to see that number around 45% or less in order for them to trust that you're going to pay them back. So if the number is higher than 45%, then you want to start thinking about paying off some debt, maybe paying down your credit cards or making more money, bringing home more. So you may consider, maybe you want to Uber or Amazon Flex or DoorDash or whatever, just to bring in some extra income to lower your debt to income ratio. So those are three things that you can do right now just to prepare yourself for just the first step of purchasing a home, which is getting the pre-approval. Those are all the things that the bank is going to look at, and have all your tax information and all of that stuff readily available as well, because they will request that also. Now, of course, even before or once you get all that information together, reach out to me. I will be more than happy to guide you through the process of purchasing your first home or purchasing another home or an investment property, if that's what your goal is for 2023. So I wish you the best and Merry Christmas, Happy New Year. See, I got my little hat on. And again, reach out if you need some help or you need some guidance with purchasing or selling a home in 2023. Talk to you soon.